And today, guess what? It fucking got an offering and it fucking went down to $4. Crazy, right? From $4 to $19 back to $4. So what does that mean? That means that this stock ran so much, there's going to be a lot of guys hungry for the next APDN. And so they're so hungry because they missed out on the first one. And they're like, I'm not going to miss out again on the second one. So they will be chasing whatever stock that fits that profile. So the profile looks like this. That stock started out at $4 and something, and it gapped up, and it had like 1 million shares of float. So the float was like very low, less than 1 million. So today, NY and NSYS had the same profile. Look at the prices, very similar prices. Similar float, less than 1 million float. Fucking it ran big time out of the open up to $7.47. I actually shorted up there. But before that, I explained to the room, be careful about this play. And these are the reasons why, we were very careful about NSYS being a long. Never touch long because of this reason. So we always have in the beginning pre-market, we always have a first bounce line, which is the support. I drew that line around 510, 520 actually, and then it ran to $7. So when it runs that far up, it's like fuck. So the reason why NSYS to me was, in my feeling, and I shorted that stock up there, is because it was a true sympathy play. I looked at the news. The fucking stock ran on earnings release. Okay, these are the best fucking stocks to short like that. The reason why, because it's a sell on news. Okay, sell on news. The ones that keep going up are the ones you don't know the end game yet, such as so-and-so released a new product, so-and-so had good phase 2 results, so they can pump it to the moon. $1 billion market cap potential, market space, right? But I looked at the news, it was an earnings release, and the earnings wasn't even that great, dude. They had 13% increase. Is a 13% increase warrant a 200% move? It's not. We know the end game is coming, but the problem is you can't just short right off the bat. You have to let that stock do its thing. Okay? A lot of people knew the APDN was pig. It's a piece of shit. No kidding, it's a piece of shit. The problem is, can you fucking stay in the game long enough for it to drop? So these early guys that are pure fundamental guys got crushed. You're shorting this shit at $7, $8. It came from $4, makes sense, up 100%. It shouldn't even be 100%. It needs money, it needs financing. It's about to do an offering. But it ran up to fucking $19. There's no way you can fucking keep holding and adding to infinity. You will fucking get margin calls if you don't have enough money in your account. So that's what happened. They got squeezed. And so what makes NSYS a sympathy play for me is because why is it running 200%? Only reason it's running because of APDN. And if you can say that, if you can say the only reason it ran that much because of that, you've already identified a great target for a short. A great target for a sympathy play that's a short. Okay? But you have to be careful. These shit run. So the reason I shorted where I shorted at $7 and something, because I looked at the chart. I looked at the fucking year chart. I looked at the 2-year chart. I looked at 4-year chart. If you take a look at that, where does it top out? At $8. So I knew that if I shorted around 7 something average, that where can it run to? $8. You see what I'm saying? So if we always say this: plan your trade and trade your plan. And part of that plan is to know your risk. If I know my risk, I'm not going to be scared. My risk is $8. You see how that works? I looked at the fucking year chart, 2-year chart. I saw $8. I looked where it came from. It came from $4 or $3, $2, wherever it came from. Then I looked at the news. Does the news warrant that much increase? Why is it up? It's up because of APDN. Then I looked at APDN. APDN got chopped up today. There's an offering that came out. So it was weak. So those are the things. It was fucking weak. So I knew if any fucking disturbance, any little weakness in in the Sympathy play, that people are going to bail. Because they're like, if you're a long, you're holding that stock, NSYS, and it drops, and then you look at APDN and it fucking now is at $4 from $19, you're shitting yourself. All these things in your head are going off like, oh fuck dude, what if an offering comes out on NSYS? So you will bail. But if APDN did not tank, you should be very careful shorting that shit and holding it too. It's because, dude, the head of the monster controls the move of every Sympathy play. And that monster, APDN, got chopped up already. And so, that's why, in my opinion, this is my opinion, that's why NSYS did not fucking hold up and keep running. Because they're looking at APDN and they're freaking out. Okay? There might be a lot, I saw a lot of sellers too. So another thing I saw was this. The float was supposedly less than 1 million. The volume is like 7 million, 5 million at that time. Why is it not running harder, faster? Why is there so much overhead? And that's also because it's easy to short. It's called ETB, easy to borrow. Means so that was what scared me actually. I was like, man, if they can hold this line, they have trapped all these guys that are short. Okay, APDN, it's like there was hardly any borrows, so it fucking tanked without any resistance. And so this is like all hindsight, I'm telling you, but it's not really hindsight because I actually fucking shorted up there. I showed you the prints on Twitter already, and that's because I mitigated my risk by knowing where my loss areas are. I saw this thing at $8, topping off at $8. And then I waited for that thing to hit $7. And then I see how it reacted at the $7 line. And I saw a lot of selling. Then I saw a lot of selling around the 730 line. You know, it was like, dude, all this volume came, but it didn't really fucking run. For a stock that's less than 1 million float, like a million volume moved it like 30 cents. Something's wrong. There's some fucking seller, big ass seller up there. But so you see, so it's a combination of knowing the head of the monster, APDN, understanding the news of the new Sympathy play. The news was fucking earnings release. Whoopie-doo. What more can they fucking release? They released the news already. Earnings went up 13%, which is, does a 13% warrant a 200% move? No. You see, so I'm painting the picture. I'm always painting the picture to see what's going to happen. And then the last step was to look at the chart, and the chart was showing me that $8, it topped up at $8 at like all-time highs or fucking shit like that, right? It's like many years, if I go back a couple of years, it'll show $8. And so I'm like, dude, so if I've shortened this shit at 727, how much more can it squeeze me? It exhausted itself. So I put all these pieces together to formalize that trade thesis. So these are the things that you look for when you're doing this, right? You're looking for the painting the picture. You're seeing the catalyst of the move. Catalyst meaning like the reason why it moved. And so that was one of the things. If that news was something else, like they fucking like released some fucking new product and shit like that, and then it's like, okay, maybe I'm fucking scared because, you know, they can start pumping more shit like the market penetration is $1 billion on this new line of fucking whatever they're doing, right? But it's a fucking earnings release, guys. It's an earnings release that only fucking ran this much because of APDN. And then I looked at the time that they released the earnings. It was yesterday. It was not this morning, guys. It was fucking yesterday at 4 p.m. It means, why didn't it run at fucking after hours yesterday? You know what I'm saying? Some guy sold APDN, moved the money into NSYS. Okay, we talked about this money, this flow of money. Okay, because if that news on NSYS was indeed a good news, it would have ran after hours last night when the news came out, but it did not. It did not run last night. It ran this morning when the head of the monster tanked. So to me, it looked like they fucking moved the money flow from APDN to NSYS, and they pumped it to $7. They sold the fuck out of it, and it fucking tanked back down to $5. Okay, and then where did it tank to? It tanked to exactly where the first bounce area that I posted in the room was, around $5.10, $5.20, $5.10, $5.20, right? And so it's still, where's NSYS right now? It's hovering at what? It should be around that price too. And then I look, and so, okay, so I'm gonna stop there. Does that make sense, guys? So I'm painting the picture on Sympathy Place, and so these are the clues I'm looking at. I'm looking at the reason why it ran. It's a catalyst. I'm looking for the catalyst, the reason. And then I'm looking at my max risk potential, which is the $8 line. So if I got in at 727, fuck, I'm okay. I'm using the 30% rule. I only had like max of 3,000 shares or some shit like that, right? Of short. So I wasn't balls to the wall yet, because who knows? My picture might be wrong. It's all timing, right? My picture is right on the longer scale, but on the shorter scale, can I survive the squeeze to $8? Yes, I can. But if I saw the chart go up to $16, fuck no, I'd be fucking entering this shit. You see what I'm saying? So I'm already trying to visualize my loss. So the way to mitigate the loss also is put a stop loss. Put a hard stop loss if you want. Okay? You can trade anything you want as long as you have your risk predefined. By risk, I mean put in your stop. Okay, see, 543. So it's still hovering about the same price. So, okay, so that's the Sympathy play on that. Let's talk about the death line, guys. The death line on APDN. I told the room the support is $12. This was pre-market before the offering news came out. $12 and then $10.33. So the lines, the support, the last defense lines are $12 and then $10.33 is the absolute, like, no point, the point of no return, which I call the death line. The death line was actually under $12 because that was the main big support, but $10.30 was the last piece of support from the previous day, which is yesterday. So under $10 was this fucking game the fuck over. It ain't coming back. So if you are a long, you should not ever buy a stock that's under the death line. The death line is the death line, meaning I call it the death line because it's the line of no return. You cannot fucking bounce a stock back up, okay? It may take you days, but it's not going to be the same day because there's so many bag holders, so many shorts that want to get in. So there's basically what we call too much overhang. But, you know, and so it came true. It fucking tanked and it dropped. But that was, it went really quickly because of the offering news. But the signals were there under $12. And no, I did not short APDN. The reason why, because the fucking short location was $1.60. I didn't fucking know it was going to go to $4. The only reason it went to $4 is because of the offering news. The offering came at $5. And so it was all these big things that came in. But I thought it was like, okay, $12 to $10. That's realistic. Or, you know what I'm saying? Or under $10. But the price of the short location did not warrant it. $1.60? I have to make $1.60 just to break even? It's like, no, thank you. So sometimes it's a no play, guys. It's okay to miss these plays, but you learn something from it. So I learn something every day, dude. So just because I didn't trade it, I learned something from it. And then I watched NSYS. So that's, you know, so next time when you see this same setup, guys, you will see and understand and maybe trade for profit. But as a long bias trader as well, you should not be entering stocks under the death line. And we talk about the death line. A lot of people make fun of the death line on that, but there is a death line is the true backside. Okay, a lot of people think that under VWAP, volume weighted average price, is backside. You know, there's a bunch of backsides, man. There's a Kim Kardashian backside. There's my backside. My backside is not the true backside, right? So, you know, people call these things all they want, but there's a true backside in my definition of a backside, meaning the line, the true line where there's the point of no fucking return, dude. And for APDN, you can say that was the $10.30 line because that was the point of no return yesterday. But then $12 was where it bounced off yesterday as well. So you can consider both of those two lines. But 12 is the more riskier, because they could have saved it at 12 bucks. Because yesterday they saved it at 12 bucks. You see how I'm coming up with these lines? Yesterday they saved it at $12. So they bounced it off at 12 fucking dollars, and people got squeezed from $12 to $19. But under that, and if it stayed under, that's a confirmation. So what happens is this: you could short it under 12 bucks, put a stop at 12.50 or 13 bucks or something like that, and then, you know, and walk away. Or you can slam it under $10 and hope it doesn't bounce back. But what I like to do on these plays, this time it's a offering, so there's fucking, it just tanked. What I like to do is wait for the confirmation and short the bounce. So I will wait for it to go under $12 and then short the bounce. If it holds at $12, you see what I'm saying? So let's say it goes under 12 and it hits 11.30, and I'm waiting for it to bounce back to 12 bucks to short. That's a safer way to do it. Or if it's under death line, I would slam the bid under death line, some of it, and then add on bounces. That's the way I would trade the death line. Because the death line to me is a true backside. And there's still enough meat. Like Kim Kardashian's backside, there's a lot of meat on that shit, right? My backside is not the true backside. There's no fucking meat. You understand these backside analogies I'm using now? Anyways, so the way I trade those death lines is I hit some on the bid just to make sure I'm in, because it could fall, boom. I get in some early, and then I add on the bounces once it confirms, only once it confirms. So I always tell people this: do simple support and resistance. The old support, once the old support gets broken, meaning the floor gets broken, it becomes now the ceiling, which is the resistance. So a lot of these people have been trying to teach all these complicated fucking shit. But the main thing you need to work on to learn, in my opinion, it covers most of this, is resistance and support and pivot lines. I call those lines, the family of fucking lines. I do not use candlesticks. I use a line chart. I use everything, by the way. I have everything. But I look at the line chart to give me the precision I need. I know exactly the line based upon the line chart. A candlestick doesn't fucking really show me that as well. But there's nothing wrong with using multiple types of charting. I have a lot of different types of charting up. Volume profile, candlesticks. Yeah, and then I have VWAP as my indicator. Simple VWAP. I don't use moving averages. It's because I'm an intraday trader. I don't swing. So those moving averages are too slow for me. Doesn't really matter much to me because I don't swing. So you have to understand when you're using indicators to know the context of which these indicators work. Some of these indicators are more of a swing trading, longer term, than a shorter term. That's why I use a line chart. I'm an intraday scalper, intraday trader. So I use the fucking line chart. I use a 1 minute line chart, by the way. You can mask and use 5 minutes, whatever you want. You leave up multiple charts. That's what I do. And that's why I have a lot of monitors. Because I have a lot of charts on one stock. I have a lot of order entries on one stock. So I'm always ready to go. Whew. Okay, let's talk about CLVS. What's the CLVS at right now? What's CLVS at, guys? Explain that one too. CLVS. CLVS was a multi-day runner, and 620 was the line. The line that you should stop out at. Yep, it's 640 now. See? Yep. And look at the time. What time did it start spiking, guys, on CLVS? You guys know the answer to this already. You don't even need to look at the fucking chart. The time is a zombie time, right? Was that what it was? Around 10:30 a.m. And notice where it stopped. It spiked up so much, dude. Once it broke 620. 10:30, right there, my friend. 10:30 time. So those are the things that we preach at NSYS. Remember, these are observations. They are not the law. They are not like the law of gravity. Gravity is a law. There's no way on Earth you can get around gravity unless you do something, right? Like get into a spaceship and then fly really fast. But for a normal person, there's a law, and then there is like an observation. The zombie is a rule, meaning At that time, I observed that trading slows down. Retail orders stop coming in as much. Liquidity dries out. Boom, perfect for the algos to come in and spike these guys up. Okay, they trap when they do whatever. So that's why we always, so there's a process that we do at NYC. As a short seller, I kind of wind down my positions by the zombie time. I can still hold some. If it breaks down, sure, hold it. But start to take some profits at least, because you never know. These things zombie up, man. And don't enter a new short during the zombie hours. That's a big fucking rule that has helped save many lives, many short seller lives. Do not enter a new short position after the zombie hours on a stock that's been moving up. Okay? A new pumped up is a different story, but a stock that has been grinding the whole morning and it worked itself back up, don't fucking touch it. And then another indicator we like to use is called the VWAP reclaim. When it starts down low, way under VWAP, and then it reclaims it. By reclaiming, it goes back up. It takes back. It goes back to that position. So these are the clues that you put together to avoid certain traps. Because trading, man, is as much as knowing which stocks to trade as well as knowing which stocks not to trade. You can save a lot of headaches. So so just knowing what stocks to avoid and what stocks to get in. And remember, I speak from a short seller perspective, but the inverse is true for long side. So I wind down my trades at around 10:30. If you're a long bias trader, start to look at stocks like CLVS around that time, and you would make money, right? You do the opposite, the reverse of a short seller for long. So that's why people go, why should I join your room? I don't short. But knowing when the short sellers should not short gives you the advantage as a long side bias trader. You know the zombie rules are negative for short sellers, so it's going to be positive for you. So look for those moves. VWAP reclaim should stop out on the VWAP reclaim if you're short. But if you're a long bias trader, you buy on a VWAP reclaim. You see how that works? Knowing the death line. The death line is a point of no return. I love to short into the death line. I love to short all the bounces of a death line. Therefore, as a long bias trader, you should not even touch stocks that have breached underneath the death line. Make sense? So that line is very, very important to saving you guys huge headache. A stock like APDN was $19. It went down to support at $12. I see people buying that shit there. Because they're like, fuck. They're using some fucking 50% rule, which is cool, whatever that is. But it went down, and they keep adding. Now they're adding at $10, $8, $7, $5, and now they're fucking $4. That's how you get wiped out, guys. But knowing these lines help you determine which stocks you should trade and which stocks you should avoid. And that NYSS is not even fucking worth it for me to touch. Even for a short, unless it goes way back up. It's just fucking... Alright, so that CLVS. So that's what happened, man. CLVS is slowly grinding up. And you notice this. So another trick I like to use is, I like to look at the range of the stock. Range meaning how much it goes in a channel, up and down. And what happens in the beginning of the day, the channels are wide. Because there's real order flow from real traders, from real retail guys like me and you. And then what happens is this, the channel starts to be smaller and smaller. The moment it collapses, I'm getting the fuck out. It means they've already consolidated and they may squeeze up. And that's what happened at CLVS. The channels were 20 cents, 30 cents, and then it became 10 cents, and then boom. If you take a look at that, it's like bouncing the ball on the ground. So the oscillations, right, which is a channel. So first it was wide and it starts to shrink down. And so those are the clues to the consolidation level. And then followed by a big explosion of volume. And then it triggers all the stop losses. And that's why CLVS did what it did. Whew. Man, that's a lot. I'm fucking talking and walking up the hill. Who wants to get on, guys? I want to bring one person on. Any questions? So that covers sympathies, and that covers death line on which stocks to trade and which ones not to trade. Some of these plays happen all the time. I love trading the sympathy for a short seller. For the long side, for the long bias trader, you got to be careful on the sympathies because they're not going to perform as well. I told the room all morning. I warned, I gave all these reasons. And surely enough, it fucking did not run to $10. And I was fucking there waiting at $8 line too. So mitigate your risk, paint the picture, and see where the potential of the run is. And knowing that I would not tackle this if this was the main monster. But this was a sympathy, and I put all the pieces together. Bring me on. I'm a vet. Cool. Go live with E. Hey, Mitch.
What's up, sir?
What's up, my friend? You working out?
Oh yeah, got to. Perfect time to work out.
Hey, so tell everybody who you are, where you from, all the good stuff, my friend.
My name is Eric. From Los Angeles, California. Navy veteran.
Happy Veterans Day, brother.
Thank you, sir. Thank you. Just listening to your video today. Just trying to take in some notes while I get my workout on. Very interested in becoming a day trader.
So, what experience? So you just
I'm
barely starting off.
Green. I'm just researching. I read a couple books right now, so I'm just green, ready to go. I'm trying to get.
So I'll tell you what it entails. Okay, this is the honest truth of what it entails. You're not gonna get rich overnight. It's gonna take time for you to learn. It's a very hard process, and so what happens is this: a lot of people want to chase alerts and pumps because they want to get rich quick, and that's how you lose. And that's what we call a sheep.
Right.
And the way we do things are differently. I want to teach you to learn to trade for yourself. I'm not here pumping alerts out to you and making you copy trade. And so my style, actually, is very frustrating for a beginner to learn because there's so much, right? They're like, just give me the stuff, man. Just give me the stuff. But I can't, because otherwise you'll just copy the stuff and start losing money. I want you to understand the process behind it, and then slowly you will start to do it yourself. So I'll give you a roadmap of how you can start. Okay, you already did the first step, watching these videos. These IG live videos I do are mindset videos. No, I'm not teaching you to enter and exit at whatever price, right? I'm teaching the mindset, painting the picture of the trade to understand what's going on. So today you learned sympathy plays and how it works. And then you go back to the classroom. The classroom is, we have more videos that teach you exactly how to trade them, like where to enter, where to exit, okay? And we have DVDs on this. And so in my opinion, you spend the first month in the classroom. Don't even fucking trade, dude. Watch the videos. It's like education, right?
Correct.
It's like you have to fucking learn. Like same thing in the army, man. You have to learn how to shoot a gun before you touch the gun. You have to go to safety.
I was the air traffic controller for the Navy, and
you have to learn, right? You have to
training
learn.
before we go to the fleet.
Yep. You're not gonna be able to touch any of that stuff until you read books and learn, right? And get mentored. So that's what happened. So the first month is all education. You watch, and then what you do is you open up a paper trading account, which is a simulator. And what the simulator does is now you get the feel of how to enter a stock, how to exit the stock, how to do a stop loss, things like that, before you start using real money. So you do that around a month. So you use a simulator, in my opinion, for 1 month, and you move on to real trading. But when you do real trading, you do tiny size. The goal of real trading in the beginning is not to make money. It's to simulate real emotions. Because even 100 shares, if you're up and down $100, I guarantee you, if it's real money, you would be affected more than you do with fake money. You see? So a lot of people, I made $10,000 using simulator. That's because there's no emotions involved. You don't give a fuck. Same thing with your Navy. Imagine you're shooting in a simulator. Bad guys. Fuck, you go to a real bad guy, you're gonna shake at his fucking head.
Yep.
So that's what you do, man. So they slowly get you into the rhythm. So same thing with trading, man. The guys that have very good discipline, like the guys in the Army, in my opinion, do well. Because I always tell people this: it's not how smart you are, it's how disciplined you are. Because trading is a lot of discipline. Being able to wait, have patience, to stop out, take your loss. It's all a process. And it's like the Army, dude. It's like the Navy Army. You go through the routine, right? Every day you do the same routine. So that's what I do. I wake up, I do the same fucking routine. I don't even think about it. After a while, you don't even think about it. It's like second nature to you. You do the same shit every fucking day. And then each day you learn a new thing. And you refine your process to make it better, more efficient. So that's what you do. So we have free videos that you start, and then we have even more videos when you join. So the path is to learn a month, watching as many videos as you can, learn the mindset on that, and then go to a simulator, and then after a month, so it's I would say 3-month process if you really dedicate yourself to get to the point where you're making a trade, like a tiny size, like 100 shares, just to learn. So that's the sort of realistic expectation that I think that most people don't understand. They think they get in, they get rich by the first month, and then they burn out.
I like that. Right. Makes sense.
Cool, brother. I hope that helped you, man.
Yep. Good looking out.
All right, man. Good luck, my friend.
Have a good day. Yep.
Thanks, man. All right, guys. You see that? That was... Whew. So I hope you guys understood the process it takes. A lot of people think they're going to get rich the very first day they join. It doesn't work like that, guys. That's how you burn out. I want to teach traders to be self-sufficient in the long run, to trade for themselves. And that's why we have a very, big retention rate. Because we're setting real expectations. I don't want people to come in thinking they're going to make fucking millions of dollars the first fucking month. You can get lucky, sure, but fuck, that's not how life works, right? So I want to repeat that once again, okay? In my opinion, it's a 3-month path. First month, education. You don't even need to touch a stock yet. You read, you watch, you read, you watch, you read, you watch your videos every day. You come in and you watch that stuff. And then you open up a simulator the second month. And then you start to play simulated trades. Simulated trades so that you learn the mechanics of placing a trade to become comfortable. It's like first, like shooting a gun. How to handle a gun, and then you touch the gun, but you don't shoot anybody yet, right? And you go to the simulator. And then the third month, you don't want to stay in the simulator too long, guys. Okay? This is what my experience is. You stay in the simulator too long, it kind of fucks you up because you're too used to the simulator. You're used to all this shit. You're used to the instant feel. You're not being emotional, which is not true, because in the loss, you don't give a fuck. You're gonna hold that shit and you don't give a fuck because there's no real money. And if you blow up that simulator, you're gonna open up a second simulator. It's how it works. So you do not want to spend too much time in the simulator. My experience has shown that guys that spend too much time in the simulator get scared when they go real trading. So you don't want to fucking freak yourself out. Okay? So there's a path. You do it for 1 month, just get the feel. And then you move over to real trading using tiny size. Tiny size. The goal is not to make money. The goal is to learn. Now, real fucking bullets. There's real bullets now in the gun. You're not shooting fucking air anymore, right? And so you use fucking, you use small size and you start to move up. And what you're trying to do when you're doing small size trading is to learn to become consistent. You're learning to take the loss. You are basically doing this, guys, creating a process, a repeatable process, a routine. So that becomes second nature. So like a routine in the morning, you eat breakfast, you eat lunch. You've been indoctrinated to do that since you were a baby. So it's just fucking normal. You wake up, you fucking eat breakfast, eat lunch, whatever it is, so it becomes your routine. And so you do the same thing over and over every day, it becomes a routine. And that's why it's very scary. If you do not have good habits to begin with, these good habits turn to bad habits. Okay, so that's why I want people to do it the right way, so that they build good habits to begin with. Whew. There we go. And that's your 3 month and then in 3 months, that's why I think you should have a solid foundation to place a real trade. And of course, some people are quicker to learn by all means, but I'm being very realistic by saying what that general, in my opinion, would be. So those are the expectations, man. Whew. We use Cobra Trading. Google that. Mention your NSYS. They have a product for guys under pattern day trader. So Cobra Trading. Mention NSYS. You get some deals. And being under PDT is okay for now because you're still learning. You're still learning, guys. Or if you want to skip the simulator, you can do that too. But make sure you're using tiny size, like 100 shares, 50 shares, shit like that. And then the cost of tuition. Now commissions are free in a lot of these places. But you get what you pay for, man. You have to start using a real broker, like Cobra Trading. These free ones, they're free for a reason. Any more questions, guys? I think we covered a lot today, man. This is a good IG live. Whew. I could go work out. Well, thanks, guys. I'll see you in the room. I'll see you next time, man. Take care.